We're going to announce the judges next week. We've got 5 professorial level economists to judge it, international economists
global?
to judge it. Yes, global. And we've already had 600 expressions of interest from economists around the world as to them entering the competition.
Give us a sense of the calibre of the entries.
Well, we've had at least one Nobel Prize winning professor express an interest in entering.
And have you looked through any of the ideas yet?
I'm not expecting to get people's ideas in for another 2 or 3 months.
And is your feeling that there are lots of ideas, or people don't have an idea so they want to think about it?
I think there are ideas, and economists have been thinking about this, but I don't think one person has really thought through every element of it. And just to give you a sort of feel for the complexity of the question, what happens to private debt? What happens to your mortgage? If you're in the euro and your country falls out of the euro, what happens to your mortgage? And then we need to think about what will the international banking system look like if all these changes take place.
And there's going to be a whole new central banking system to set up behind that as well. So new central banks in each country, get rid of the ECB.
It depends what the configuration of Europe looks like after the euro breaks up, if it breaks up. And I should just say I don't want it to break up. But if it does, I don't necessarily think we will see 12 different currencies in each member nation, in the major member.
Do you think there'll just be a smaller Eurozone?
There may be 2 or 3 blocks, who knows? And this is one of the key questions that we need to answer, is what is a stable, optimum currency block within Europe? Is it a nation state, or is it a small group of nation states that have very similar and integrated economies?
Obviously, the costs for all these governments are immense already, just surviving. How can they then afford the cost of a new system?
Well, a new system in itself doesn't cost a great deal. It's a new central bank. I mean, there are already central banks in each country, so the actual infrastructure is there in terms of the banks, etc. What the expense will be, the writing off of debts in countries whose currency has devalued. But the extent to which those currencies are devalued can, to a certain extent, be controlled. If Eurozone breaks into different currency zones, what should be the relative value of the different currencies? In effect, that is a controlled write-off of debt. And whether that's affordable or not will depend on the math and how much those currencies are devalued.
Since you launched the competition, many people's worst fear has transpired, and this seems to be taking in Italy right now. Their bond yields have gone above 7%, concerned that that's a tipping point for Italy. Has that changed the pressure on the competition?
I think it has. I mean, my biggest worry is that something may happen before we've even got the answers in. And I sincerely hope that, as well as people working for the sake of this competition, that all the central banks in Europe are busy working on exactly the same problem, because if they're not, we could have chaos.